Hello and welcome to VCC TV. This is Joseph Rai. We have with us today Ms. Ruchira Shukla, who is International Finance Corporation's Regional Lead for Venture Capital Investments in South Asia. We'll be talking to her about the VC trends in India and about IFC's investment strategy. A warm welcome to you.
Thank you.
And thank you for joining us again. So before taking a deep dive into IFC's investment strategy, I want your assessment of the overall VC trends in India. So I'll throw some numbers at you. So according to our internal data, the number of VC deals last year fell slightly to 330 from 455, but that is a far cry from around 600 deals that we saw in 2015. So how do you read this particular trend and what is your outlook for 2018 going forward?
Clearly 2015 was a very frothy year, and anything that you would compare to that year would look extremely low. But in my mind, where we are today is a much more rational and balanced environment. While the number of deals seem to have come down marginally, the quality of deals getting done is far higher. The nature of investing in terms of the kind of business models that are being supported and their potential to support the country, that quality has dramatically improved over the last couple of years. So I'm very bullish about where we are today, and I'm very bullish about the prospects for 2018.
So if you look at the numbers closely, so there was more pain at the Series A level, while the number of deals stabilized at the mid-stage and the later stage level. Do you see this as a new normal where Series A deals will be fewer going forward?
I think that is the right trend that we want to see in this market. What was happening earlier, the reason for a lot of Series A deals getting done was that if a space became interesting to investors, suddenly there would be 8 deals in that same space. And all those 8 Series A deals happened, which meant that as they grew, not everyone grew to a size where they could command Series B and Series C, and therefore some fell off the market. We don't want that kind of a phenomena. We want us as investors to be selective up front. It's actually wiser to do fewer Series A deals and then support them in the long haul.
Okay. And also, while the number of deals are going down, we are seeing dry powder increasing in India. Do you think this is a little bit paradoxical while LPs are committing more money to India, but deals are not happening on the ground?
It will in the short term appear paradoxical, but I don't think it is so in the long term, because new sectors are being created. There is a lot happening in the AI space in India and how AI can be applied to financial technologies, to healthcare systems, and all of that will need to be funded. So all this dry powder, in my view, will be put to good use. Also, as I was saying before, this will also be used to support companies in the longer term. Because a lot of investors now recognize that it's not just important to do the first round investing. It's important to keep some capital reserved for follow-on investing, because it can take several years before an exit is realized. And a good performing team with good operating metrics should be supported repeatedly over multiple rounds.
And what is your take on valuations at the moment? Do you think it's become more sane and rational?
Yes, definitely so. They're more rational, they're more stabilized. As I said earlier, deals are better thought through, and because of that, the valuations that you're seeing are more tied to the metrics being delivered and not because of some comparison to a different market that is not parallel to India. There are very India-specific analyses being done by VCs, and valuations are driven off that, and I think that is all good for the ecosystem at large.
Coming to IFC's investments, you've maintained the pace of doing 3 to 5 deals every year. Do you see that maintaining that pace for this year as well?
Yes, we should be able to maintain that pace for this year. We do not necessarily tie ourselves down to number of deals for a particular year. We are driven by the opportunities in the market. If the next year I see very many opportunities that are interesting, this number could go up. If on the other hand, the market does not throw up good opportunities, it could go down. We're not tied to necessarily achieving a fixed number of deals or a fixed amount of capital any particular year. We are more driven by our strategies to support the right sectors that can be impactful for the country as well as generate good commercial returns.
Okay. And last year you did 2 new investments, that was in Moglix and Power2 SMA. Could you throw some light on the sectors that these companies operate in?
Both these companies are in the B2B space. We are big fans of the B2B e-commerce space, and we are strongly supporting this space. The reason for that is SMEs and small enterprises really got excluded from digital inclusion. They were the ones that continued to operate and still continue to operate with pen and paper processes despite digital adoption by consumers. So you hear a lot about B2C companies, but not a lot of B2B companies get media attention. But this is a very important sector for India, because as SMEs get included into the digital framework, you will start to see records of transactions digitally. You will start to see operational efficiencies. And all of that will lead to a dramatic shift in how business gets done in the larger manufacturing and services space in India, most of which is supported by MSMEs. I also see this driving financial inclusion for SMEs, because once you can track transactions digitally, banks and financial institutions are better placed to assess the creditworthiness of these businesses, and hence create opportunities to lend to them in a manner that can be sustained over time.
Okay. And also you did a follow-on investment in the healthcare portfolio, Portier, and a follow-on in Big Basket as well. Now, one of the trends that we've been noticing is among conventional VCs, they're doing more follow-on investments than making fresh new investments. What is your reading of this particular trend?
It goes back to what we were saying earlier, right? It's important to continue supporting your portfolio companies as long as they are delivering. That is, in my mind, more important than doing a new investment. Because what was happening earlier is a lot of businesses were getting capitalized early on, but then they were being left to go hunt for new money down the road. And as VCs have realized that the time for exits will be delayed, India has not been a market which has demonstrated very quick exits. You need to be able to support winning businesses over multiple rounds of funding. IFC believes in the same policy. For every company in my portfolio, I will support it in multiple rounds as long as they're continuing to deliver.
So you touched upon exits. Are you more positive about exits now than you were 2 or 3 years back?
I am more positive on the quality of businesses being created, and I think the exits are an outcome of that. If good quality businesses are created, exits will come. There will be global majors that will look to India to buy these high quality businesses. There will be opportunities to list these businesses. So I think fundamentally what VCs and entrepreneurs should be focused on is to create high quality businesses that are solving real problems. And if that happens, the exits will follow.
And which sectors are you most bullish on this year? Which are the sectors that are going to be the breakout sectors?
I think there'll be a lot of new innovative spaces that come into being and get everyone's attention. As I said, B2B will continue to get attention. There are a lot of parts of the B2B supply chain that need to be digitally enabled. So we will see a lot of that happen. AI in health, AI in energy, and AI in financial services has a strong role to play. And these will be spaces that will be very well funded. I also see a lot of potential in language solutions, because in India, a lot of digital inclusion has been focused on people who live on metros, people who are digitally savvy and English speaking. We want to see that digital inclusion spread beyond that segment to people who don't speak English and are not digitally savvy. And for them, you will need very sophisticated and user-friendly language solutions in order to bring them into the digital realm.
And we also understand that IFC has been making a push outside India as well. Which are the neighboring regions that you're touching upon, and what are the investment opportunities out there?
So this year has been a very important year for us in expanding our venture program outside of India. We have done 2 investments in Bangladesh. Actually, one is almost done, the other is about to be done. But these are investments we are very proud of. We've picked winners in that market. Bangladesh is a strong, growing market with a large population that's homogeneous and can be served easily by digital platforms. We want to support the growth of businesses there. We have also started looking at our first few deals in Sri Lanka. We think both Sri Lanka and Bangladesh will follow the path that India has been on. And despite limited VC interest today, we see that the things will change down the road. So IFC would like to be the first mover, the flag bearer in these markets, and to demonstrate to other venture capitalists that these markets will deliver strong businesses that will give good returns. And with that demonstration effect, we expect private capital from across the world to come into these countries as well.
Okay, before I close, I also wanted to understand your investments in funds. You've been investing in VC funds as well. You did investment by Ventures last year, IDG as well. So what is the status on that particular front? Are you going to be more aggressive in investing in funds?
VC funds will continue to be a strong area of focus. We think of these funds as good partners to us. As you mentioned, we did Pi Ventures last year, we did IDG, we also invested in Stellaris, and we see them as strong partners in generating co-investment opportunities. So we continue to explore co-investments with them. In companies that are in their portfolio, if IFC does a follow-on investment, we find them to be good partners on the board with us. So we certainly will increase our VC fund investments in the next year.
It was a pleasure talking to you.
Thank you. Thank you very much.